Hello and welcome everyone to your midweek live. I'm so happy to have this back. Again, anybody that's been with us for a long time, we used to do everything live. We show up for our time. We did even the currency room we did live. And over time, we have seen that big transition that everything has gone into the video. So for the last 3 years, I think we've gone everything onto the video, where now we want to bring this back. Get the more momentum going. Especially, I know some traders want to have that more interactive live session. So, good to have this back. And the way we're going to do things is that we are going to kind of follow the same format as we do, but we'll do things live, and you'll be able to ask questions. Just if you have any questions, anything you want me to take a look at, go ahead and type in the chat box. And then towards the end, when we are doing our technical analysis, we will be able to chat a little bit more about your questions.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
All right. So let's get started here. As always, we'll be talking about trades. We'll be talking about ideas. Make sure you take responsibility for everything. Now, what we'll be doing in this session, as always, we'll be taking a look at what's happening in the markets, what's the news is moving the markets, and then we'll take a look at currency baskets. And then most importantly, we'll take a look at some possible setups. So let's just jump into our market analysis. And I'm just going to take a look at the numbers and most importantly, news of the day. Today was definitely a bit of a moving day in the market, especially on the U.S. front. So we got 2 reports today, and I must say that both reports are pointing out to a weaker economy. ADP employment report that came out only at 37K versus 111K, so that's a big miss. Now, when we go to Friday for the U.S. jobs report, this is the one that's going to be the one I think going to be important to see if this ADP number also translated into the official non-farm payrolls number. We had Donald Trump really tweeted right after that, asking Chair Powell to lower interest rate. So there's that whole saga continues. Where there's that pressure that hey, U.S. should lower their rates. We also had the next number was that U.S. ISM services PMI. As you can see, this number came out below 50. So expectation was 52, came at 49.9. Just a common threshold. We want to take a look at anything above 50. Anything below 50 is a contraction. Now, when we take a look at the number, this was the weakest number since July of 2024. So you can see that there's a bit of a weakening going on in the markets. And I know we have talked about how none of this, things that are going on with this tariffs, things going on with everything else, really, causing a bit of an issue in the economy. But we talked about how until we get this, the numbers weakening, economy weakening, that's when you know that whatever is happening is affecting the economy here. So we'll be paying close attention to some of the economic numbers coming out of the U.S. In the next coming weeks. And we also had the Bank of Canada, and they had no change. Thanks to one of our traders who pointed out that, hey, they actually not expected to cut rates. When we put together the currency room and we looked at the Forex factory, it was showing, and the expectation was there to cut rates. So there's a bit of a change there. And basically, we have not seen anything change out of the Canadian dollar. I think the Bank of Canada is really stuck in a very tight spot here because, the inflation last 2 number, they were higher, but the unemployment rate is also going higher. So, the mandate is for the central bank is to, take care of both of the things. And now they have to really juggle between and find a balance between those two. But for now, they actually kept it the same. Now, when we take a look at the numbers, Well, is anything changed? Nothing really has changed. The only thing that we talk about is really moving is this dollar and the yen. It's pretty flat across the board outside of that. So if you look at any pairs, Kiwi dollar, Aussie dollar, well, just realize that it's the dollar that's moving. And we have this negative correlation. If the dollar is down, the yen is up. Or if the dollar is up or the yen is down. That's really what we're seeing. So if you look at intraday volatility, there's definitely more movement that we're seeing in this dollar and the yen. But outside of that, whole lot, nothing. We have the Canadian dollar. You can see just sitting there doing nothing. Euro, they're expected to cut rates, but you can see not really reflected in that price action. So I think what we're going to do is just primarily focus on, this dollar and the yen, because that's really where the movement is. Now in the global markets, pretty flat. You can see that, especially the equity markets, they are sort of range bound for now. They have had a nice run, but they are sort of stalling a little bit here. So, so broader markets not really giving us a big boost of, that risk on sentiment here. We have crypto markets slightly up, but overall, crypto is definitely in a consolidation. Gold continue to be that volatile asset. And we are seeing the oil continues to be kind of volatile as well, but down close to 1%. So crypto markets, one thing I want to point out is that the only thing that's doing well is Ethereum. Remember, for the longest time, we have Bitcoin being the best cryptocurrency. I'm happy to see that the Ethereum is really catching up to it. Not so much in the Litecoin, not so much in the Bitcoin Cash. Ethereum is the one that's playing a little catch up here. So when we take a look at our market outlook, well, is anything changed? Well, market outlook remains the same. We are even in this little uptrend that we are seeing, we are in this consolidation phase. And you can see what happened in consolidation phases is that support and resistance becomes more important because that's where prices so usually reverses. So and whenever we get this range bound, we need a confirmation candle. And I'll be talking more about it when we take a look at currency baskets, especially the US dollar. We need that confirmation candle. Until then, it's going to go back and forth. So we don't have a whole lot of help from the broader markets. And the reason why we take a look at broader markets is that gives us an idea for risk sentiment. And especially when the correlation is really high, just like how early April, when whole tariffs were going on, the risk on and risk off was really moving the markets and the currencies. So we need to pay attention to it. Now we're just seeing that the currencies are kind of doing their own thing. Global markets are kind of more stable. So not a whole lot going there. So I always get that question. I want to point that out. It's just, you got to make sure that you know when to apply the information or when to sort of, keep it on the back seat. Right now, correlations not so strong. I think we need to continue watching the broader market and also looking at also the weakness on our currencies baskets. Now, when we take a look at the news events, we still have quite a bit to go through. So let me talk about what happened last night. We had the Aussie GDP. And again, I think these numbers are not really moving any of these currencies as much. It was a negative print. The Aussie did rally, and then we just faltered. So we just didn't really see Aussie go anywhere. We did see some movement off this ADP, but it wasn't as much. The big move really came off of this USP, the numbers. Now, when we look at evening, we have not a whole lot. But then tomorrow, this is the one I'll be closely watching, is the ECB-based statement. They are again expected to cut rates by 25 basis points. And I'm also going to keep a close eye on these unemployment claim numbers. Remember, if this number starts to continue to rise, I think that's going to be a little bit more troublesome. As we talk about weakening economy. If that's the case, we'll probably see a bit of a jump in that number as well. So we'll take a look at it. But I think ECB is the one that we're going to pay attention to, and especially the statement, and see what they're expecting going forward. And remember, on Friday is really the big day where we get the US and Canada's jobs report. You can see the Canada jobs report is looking in for an ugly report, increase in unemployment rate, and we are also looking at decrease in the employment change. So they're losing jobs, unemployment going up. I think this is the reason why I'm not really as bullish on the CAD. As we take a look at the US number, I think they're expecting 132,000. Unemployment change supposed to remain the same. So we'll see if this dollar is really going to move off of that number, especially if it's a big miss. But on Friday, that will be an important day to kind of watch for. So this is the velocity score here. But what we're going to do is that since we are meeting live here, we are going to take a look at things in real time and take a look at these velocity scores one by one. And I want everyone to sort of follow that process as well as you're doing your analysis. You take a look at velocity, but also keeping in mind what a trend score is and what the overall market is. And, we talk about, the ranges. Take a look at dollar. So dollar has tested this support area 1, 2, 3, and now even the fourth time. So you see, the more time it really tests support, is it going to break? Eventually it will. But the question is this the moment? Then I think that's where we need a confirmation candle. And now when I go into a 4-hour chart, you'll notice that the reason why I kind of become hesitant is that every time we get to this point, of course, the chart's looking very bearish. But then we start to see a bit of a rebound. Same thing happened over here. Everything looked bearish, and then we start to have a rebound. But this was a much lower high. So I'm really looking for this and see, is this a break? For this to break, we need a candlestick that stays below, breaks below and holds it below that. So that's what gives us a confirmation of that. So I had a lot of questions about dollar. I'm like, hey, we are at the same point in dollar that we were just a couple of days ago. Is this going to be a true break? I think that's something we're going to pay attention to in the next 24 hours. So a lot of the dollar crosses are kind of looking the same. Now, when I go into other currencies, notice that nothing really has changed. So for me to change my strategy, it's the same, where you got the support, you got the resistance. Swiss franc, we got the euro, pretty tight range. We'll take a look at this. If it breaks any of this level in the next, since we have the ECB rate statement, see if it breaks any of that level. British pound, this one you can see had a nice momentum, but at this point, it looks like a bit of a double top here. Maybe this is about to go range bound as well. When we go into the Canadian dollar, this is range bound as well. This is the Australian dollar, kind of range bound as well. And going into the Kiwi, it's also range bound as well. See, it has not broken out yet. It has tested that level multiple times. Same thing on the bottom side. So as we look at everything, realize everything is sort of range bound. We are up either against the support or against the resistance. I think one thing I missed was the yen. And even though if you take a look at yen, this thing is also sort of range bound. But this definitely has a bigger range, and dollar has a little bit bigger range. That's why we're seeing bigger movements there. But outside of that, it's all kind of stuck. So this is why first thing we take a look at is trend. So then now I know what kind of time frame I can choose. For a trend, we need to have either be on a 4-hour to a daily chart, because we get that continuity on a day-to-day basis. We don't have that. So this is why, we've been mostly focusing on day-to-day velocity, looking at things, what's moving for the day. So as you can see that on the velocity chart, especially on an hourly chart, you can see the movements and you can see where things stall. So dollar is just stalling exactly at that support line. But I will be taking a look at possible trades here and see if this is a true breakout, let's say, what can we pair that against? Well, first one I want to talk about is the Aussie dollar. And remember, these bases can go for a little bit longer, but then think about this as like gathering energy. This thing is just, back up and down, up and down, up and down. It's just gathering energy. And when we get that big true breakout, now that's a big move that you catch on it. So this is why I know it's easier said and done. Patience is really the key here in these range-bound conditions. And eventually when things break out and suddenly you transition from a range-bound condition to a directional condition. And then suddenly I have to then adapt to that change in the markets. So Aussie dollar looking pretty good here. Take a look at Kiwi dollar, same thing, looking pretty good over here. It's right up against that resistance. Let's go through other currency pairs like dollar CAD. You can see, even though the CAD is not really the best moving currency, dollar CAD is moving lower. Why? It's just because dollar is moving. It's not what CAD's moving, it's the dollar is moving. So dollar pair, I think, looks great. I go across the board. Dollar yen, it needs to break that 140.50 area to really confirm that breakout. But you can see that this thing has been moving in between this 200 to 300 pip range. But no confirmation yet. So I want to just emphasize that as I'm looking at this, all the dollar pairs, as I go through the list, even pound dollar, you can see beautiful setup. These are great setups. Is the continuity becomes a question here. So dollar Swiss franc, same thing. So the question is, how do I catch this breakout? How do I do it? Well, you got to look for breakout confirmation. That's the key here. Because every time, you start to short here and then you say, let's say you already tried this multiple times, now you're like gun shy because you've done it 2-3 times and it reverses every time. And I think this is why I don't want to be early. I'd rather be a little later, but catch a confirmation. So for this, we need a break, and then the candlesticks kind of stay below that. We have a candle close before the support here. I think that's what's give us that confirmation. But otherwise, this could, again, I have no idea if it's going to do that. But whenever I see range bound conditions, I become a little bit more picky when it comes to looking for breakouts. I rather play back and forth within those ranges. But that's, again, I know it's not everyone's cup of tea. But if you're looking for that big trend change, draw some alerts. In TradingView, the easiest thing you can do is just draw alerts. Right click on the chart, and you can just add alert. And then you can pick that price level and say, hey, create the alert. You can do that for across the board on either currency pairs or currency baskets. When that breaks, notifies you. Now well, that something's breaking. I actually put an alert out for it, and I should be acting on it. So I think that's really where we are at. I wish that we had a better close. I mean, we'll see what happens. We still have, the 3-4 more hours for the markets to close. But this is the one that is moving. And this is the one that I think has that potential. But I wouldn't be surprised if this kind of goes back up here. I mean, who knows? But one thing that's going better over here is that we are seeing a little bit of pressure going on from that the exponential moving average. I'm going to go on a 4-hour chart. You can see that it's kind of putting a little bit of pressure here. But I mean, look at this over here. So that's why confirmation is the key. Those are the only pairs I would say that looks the best, especially as we take a look at that negative correlation. The dollar is up, the yen is down. Now, is yen in a better score? Absolutely not. Yen is still in a downtrend, it's just going sideways. So it's just a negative correlation. So if you're trying to play the dollar yen, just make sure that you get the dollar and the yen movement correct. Right now, this is just testing this 142 area. If this gives up that 142, I think the next level will be 140. So notice that it's still got a little bit more, pips to be had because the ranges are bigger. But some trades, you'll see those ranges are much smaller. So there's less you can capture from it. But overall, market conditions remains the same. As I take a look at the equity markets, I think it's the same way. It looks like it's trying to break out higher, but it's the same logic applies here too. It's stalling right here. I need a confirmation for it to say it's breaking out higher. I have a question here for okay, let's take a look at bond market. Is the bond markets telling you anything here? Well, let's just take a look at bond markets because I've been talking a lot about bond markets, but notice that bond markets have definitely deviated from the US dollar. I mean, for the longest time, let's take a look at the USD basket over here. And if we just do a comparison tool, if we just compare, let's say I can do a side-by-side comparison here. So we got the dollar here. And on the right-hand side, I'm actually going to put the bond yields. Let's take a look at the 10-year. So as I go on the daily chart, you'll notice that there's been a little bit break. For the most part, even just take a look at last year, as the dollar is going up and so is the bond yields, they were more in tune with each other. Now you can see that dollar is showing way more weakness compared to the bond yields. So there's definitely a disconnect. But you can see that on a day like today, we are seeing a little bit of a break in the bond yields, and we are seeing a much more weakness in the dollar. So I think that's why dollar looks more weaker to me here than based on correlation. It's definitely showing more relative weakness. So maybe this is a time. Maybe this is setting up nicely for that. But I think that's really where we are. The momentum is sort of a good indicator to see where where is that gravity, I like to call it. Every time we bounce, like dollar, every time we bounce, it keep coming down. Then eventually I think it wants to break lower. But getting caught up in the support resistance level is the most unpleasant thing, because you're like, I did everything correct. I looked for momentum, I looked for velocity, everything was moving, and why did it go? Why did it not work? And I think that's usually where you just have to kind of think counterintuitively, instead of thinking where, hey, this is support, it was going to break out. I'm more thinking like, hey, it's a support, price might reverse from here. So that's why you have to think a lot differently when you look at range bound conditions versus when you take a look at direction condition. So what happened is direction conditional. Let me just take a look at, we had such a good direction, let's say in yen, or even in the dollar, when things are moving quite a bit. You can see that when you have a good direction, you want to buy the breakouts. You're not looking at to see, well, I think it's going to reverse here. No, you're actually looking for breakouts to buy. That's what you get in a direction. But when you get sideways, you have to really make a pivot and think a little bit differently. All right, I have some questions here. Euro dollar for tomorrow. Let me just take a look at euro dollar for tomorrow, see if this is a viable candidate. So this is, again, same thing. I will draw some lines here. So I'll say, well, the level of resistance on euro dollar is about 115.57. So that's about 130 pips higher from our current level. So is this setting up nicely? Well, it is. It is above. We have this rising exponential moving average. We got a rising parabolic SAR. RSI is not really there. But for this to break out, maybe the next level is about 114.50, and the next level is about 115. Now, could it do that? I think, as we establish, it's the euro is not the one that's moving. So you're pretty much trading. You're not getting any help from euro. The only thing that you're trading is the dollar. If the dollar breaks out, every dollar pair that you're looking at, they're going to break out. So what I would say is that pay close attention to what the basket is doing. If the basket's stalling, it's not really breaking out, and I think that's where you need to sort of take a little pause here and say, well, doesn't matter how good the setup looks. I'm not going to jump on that trade. So that's a bit of an idea there. All right. Let me know if you have any questions as we look at things. I wish markets were more active, but remember we had our fair share back in April when we had so much volatility that I couldn't really move away from the screen. Things have definitely calmed down. But the biggest thing to do is also make sure you're adjusting to the market conditions. That was a volatile market condition. Now we got a low volatility sideways condition. There are opportunities everywhere. It's about doing the right thing at the right time, not just the right thing. A lot of times I hear that, hey, I'm doing everything correct. Well, are you doing everything correct in that correct market environment or otherwise? And that's why this is a business where I can do the exact same thing today, exact same thing tomorrow, and I can get all different results. And why? Because market is the variable. Market keeps changing. And the hardest part is, to adjust or change quickly with the markets. Do something today and do something differently tomorrow. Like there has to be a reason behind it when your decision making needs to change based on that condition. And when I see range bound, I am very a little skeptical for breakout, and I get a little bit more picky for confirmation. But when I have a good direction, I want to buy the breakouts. I want to get in, leg in, start small, keep getting in. Like that's how I like to trade when things are more directional. So we'll see if this really breaks or not. And if it doesn't break, well, you got to take a little pause here on all those dollar pairs. And the only thing, and you notice that every time dollar pauses or rallies, the only thing that moves is the dollar yen. So if you're looking for a biggest percentage move, is the dollar yen. It's going to move up 1%, go move down 1%. So if you are looking to play long the dollar or want to play off the support, the only thing I think I would like to pair with is the yen. Otherwise, if I want to short the dollar, then again, I think dollar yen probably the best pairing. I mean, take a look at percentage change for the day. Dollar yen is the biggest percentage mover, down 0.85%. It's not the dollar CAD. It's not the Aussie dollar, it's actually dollar Swiss franc as well, being in the same mover as well. All right, got another question. Tomorrow, I know we have this ECB. So the question was again, what do you think if we make a play on Euro Swiss franc? Well, this is what we talk about these negatively correlated pairs and positive correlated pairs. These are two negatively correlated pairs. They usually kind of move alongside, and then we get that big shift when they do deviate from each other, and you get a big move. I mean, I want to highlight, just like last year, Euro Swiss franc had a big deviation change, as we start to see Euro Swiss franc going higher. Now that makes it pretty easy that, hey, Euro is outperforming the Swiss franc, and you can take advantage of that. This thing is very sideways, so I don't really have a big call on a deviation if it really breaks above, like 94.50 on the upside, 93 on the downside. This is not really deviating as much. Same thing, same logic applies to like Aussie, Kiwi. I love trading these currencies when they deviate because, these are like low risk, continuous, you're paying attention correlation than anything. These are slow moving, but you can see that, you can easily make 100, 150 pip here, but they just move in a very slow fashion. So Euro Swiss franc, I don't really have they're not deviating from each other. Even if you take a look at currency basket, not even just the Euro Swiss franc, you will see Euro, Swiss franc, they're both sideways. All right, let's see. I have a question here. Was the market the same time last year? Well, good question. I always like to kind of go back and see how things are right now versus how things were last year. All because, you're going to take a look at seasonality patterns. Like, is this a seasonality pattern? Well, the answer is no. Because, I'm just going to look at Aussie here. Aussie, you can see that this time around, it's not really doing anything. What was the Aussie doing last year? Well, you can see that throughout the month, throughout where we are, take a look at Aussie from April till July was actually positive, and it was moving higher. So if you look at compared to last year to this year, you can see the difference. As you can do the same thing, go back a few years and see, like, is there a pattern that I can find? But a lot of the times, it's not the seasonality. Like, here we are, Kiwi stuck here. How were we doing last year? You can see that Kiwi, like May to July, had a massive move to the upside. So that's not, it's not really following any of those seasonality patterns. So, and why is that? I think, currencies is affected by broader markets. It's affected by economy, fundamentals. It's affected by the central banks. There's a lot of these things that affects a currency. And every year you'll notice that like things change, based on where we are, and then a lot of that has to do with the fundamentals of it. I'm going to use dollar as an example. Look at dollar, dollar was flat pretty much for all summer last year. It did break over here in this region. It did break. And it's like, why did it break here? Well, at that time, I remember if you look back at the fundamentals, like that's really where the economy, the economic numbers start to weaken, and the expectation for rate cuts start to go higher, and we saw that move. And then when things were actually not that bad, we saw a big reversal here. So notice that like that's just moving more on what's going on in the markets rather than the seasonality patterns. So I always like to just kind of look at the chart and see what they're doing. It just doesn't really always work in that seasonality pattern. But if you follow the momentum, that's really where you can, catch the move. Like you can see, this is a very good example. Your dollar last year, we had a big move over here. As you can see that it was just down, down, and down. Trend score is down, -2. All those dollar pairs were working well. And then we had a massive move. As you can see, there's a big shift that took place. And dollar remains strong for the next 3 or 4 months. So, this is why we have kind of switched from, switched to like a scoring system. We look at trends, we look at velocity. it just kind of tells you it. I'm not really trying to dive in much into fundamentals, and everything is sort of reflected in the price, unless there's a surprise in the markets, and you'll see that change. But yeah, you just follow that scoring system. It actually keeps you at the market when you should, and keeps you in the market when you should. So I think that's really where I would say you can do a lot better, is by just following that rather than getting into the noise. And why something is strong. Sometimes it doesn't always make sense. So hope that answers your question there. I got another question. With all the sideways movement, could we be looking good for a good setup soon? Like I said, like these sideways conditions can last for a lot longer than you can think. Are there good setups? They're absolutely good setups. But, the question is this the right time to, pull the trigger on that? And usually I like to, start from the currency baskets. And if things are moving on a currency basket, it doesn't matter what you pick. They're going to be good setups. They will be moving. When you have a currency basket that's telling you it's a 1 day up and a 1 day down, I try to, dive less into a setup, because a lot of times, like we looked at all the dollar pairs, they're in a great setup. And, when they reversed, they were in a great setup. Why did they reverse? Because they were reversing off these strong key levels. Eventually, they'll break. I mean, how long would that take? Who knows? But if you really look at where this consolidation started, it pretty much started like in mid-April to all the way here. That's a long period of consolidation. And until we really break, I think we can still consolidate for another month. It is what it is. But when you get that true breakout, especially on those daily charts that I showed it to you, yeah, that's where you're gonna get that big surge. That's where you'll see those big breakouts will take place. And you can go back in time and see, okay, how long these consolidations last for. Is this longer than usual? Is it shorter than usual? But, I've been trading for a long time, and I can tell you that there'll be many times it'll be like, hey, this market is not that great. And suddenly it just becomes great. But the problem is that when things are not great and you're trading and trading and trading, you can really start to do some damage to your account or start to lose some pips. And, sometimes it's just better to sit out or be selective. Instead of me being active, I could be more picky and say, well, instead of taking 4 or 5 positions a week, maybe I'll take 1 or 2, but I'll take it when I see a good risk to reward on those trades. But yeah, you can go back in time and you'll notice how things will go range bound, things will break out. And our job is just to identify what the market is and then choose a strategy that would work the best. That's just the best way to play these markets. All right. Well, let me know if you have any other questions, anything you want me to take a look at. This is why these live sessions are great. You can ask these questions live and kind of go through it, compared to the video. But, that's where, you can take the most of the live session. All right. So Michael says, there's a 10% drawdown because this market. How would I pick it up? Again, it's just a momentum, right? It's if you are in a downward momentum, let's say you're having a losing streak, which is very common. Especially when when you're using a strategy that's not suitable for the market condition. And I think that's really where you need to sort of understand, is this me or is this the market, or is it just not the right strategy? Let's say if you're all going for a breakout strategy every single time and those breakouts are failing, well, maybe it's just not the right strategy for it, because, when things break out and they reverse, break out and reverse. It's just, maybe just that's where you have to maybe take a pause. Or, just to the market condition and say, well, maybe I need to trade within the range rather than the breakout. Like I said, like when things are trending, I'm going for breakouts. When things are not trending, I'm living between that support and resistance there. But the way to kind of work through any sort of drawdowns is that you just start to, maybe cut down your position size in half, or maybe take less position, and just slowly turn the momentum. And, just the way losses compounds, your profits will compound as well. And then, and then if you're doing it correctly, all you need is like, a few good trades to really wipe out some of the losses that you had. So just think about, maybe using the right strategy or sitting out till, do we see a better condition? Or one of the best thing I recommend is, going on the demo. Like if I'm not able to call the market correctly, if every trade I'm looking at and I'm like, they're all not working well, okay, maybe I should start on the demo and see, maybe I need to make adjustments. So on a downtime, best thing you can do is, work on strategies, work on different markets and say, well, if this is the case, and if I need to develop a sideways strategy, how would I trade it? Do it on a demo. Once you start to see better results, right away, shift that momentum into the live account. That's what I would recommend. All right, Saf says, Aussie dollar, can you look at that pair? Absolutely. Before I look at the Aussie dollar pair, let's keep in mind that if the trend on the Aussie, not so strong. And so this is all about the USD weakness. So let me go into the Aussie dollar here. Well, right here looks very promising. Like I said, right against resistance, you can see how we had a fake breakout right here. It just went down and right here. So if I need to play this, like I said, it needs to break out, or it needs to give me confirmation that it's going to break out. And right now you can see that because I waited for confirmation, I saved myself some trouble here because it did break out in reverse. I need a confirmed breakout right here. So just keep in mind is that it's just not the Aussie dollar. Doesn't matter which dollar pair you pick. They all look the same. I think it's not really as much about Aussie dollar. It's more about, how the dollar is doing in general. And you can literally either diversify your risk. I mean, if you really take a look at from technical standpoint, there seems to be better confirmation on dollar CAD. If you really look at it, we did break below the low support here, 137. That's where things have been kind of bouncing back and forth. I mean, this is giving me a better sort of a signal here. I mean, this is a better breakout on Aussie on the dollar CAD here. So yeah, that's the one I would say. Also, we could take a look at Kiwi dollar. Is Kiwi dollar kind of doing the same thing? Well, Aussie dollar, Kiwi dollar, they both look very similar. All right, let me know if anything else you have, but otherwise we'll just wrap things up. I always say, as we look at more and more setups, we don't want to get in the habit of trying to push a trade. A lot of times when you're looking through and you're like, hey, can I find an opportunity here? Can I find an opportunity here? That's where you have to kind of understand. Sometimes it's better not to push a trade. The more you try to dive in, the less you see. That's where you can enter trades that you should have entered. I got a question about the non-farm payrolls expectation on Friday. What do I expect? Well, just looking at the numbers so far this week, it won't be surprised if we get a little below expectation number. I would be very surprised if that number comes out higher than expectation. If it comes out below than expectation, again, is that a big surprise or change? No, I think the way things are setting up, it is still showing more weakness. But I think if that number comes out weaker, or if the unemployment number goes higher, I think that could be a catalyst for dollar to really break out. So you see that today we're not really breaking out. Tomorrow it's a Thursday, so it's not a lot of focus on the dollar, but the dollar goes on a focus on Friday. So let's just say that hypothetically, this thing have a bit of an inside candle for Thursday. I think I can potentially look for a breakdown or breakout setup on a Friday off the news, especially if it comes out much weaker than expected. So I think things are more lining up for more dollar weakness, to be honest. I mean, the only thing that was holding up is the US data. If the US data is coming out weaker, then I think this is very similar to what we saw last year. Last year I'd recommend everyone to go back in the economic numbers and see, where do we start to weaken? And it was a very similar thing if you think about it. This was the dollar last year. This was sideways. And then when those numbers start to weaken, we saw a big sort of a move down in the dollar here. Are we setting up for the exact same thing? Who knows? But again, we want to be open to all sorts of possibilities. But I think this could potentially be a good setup or catalyst on Friday for the US dollar pairs. So yes, I will be very much looking forward to these dollar pairs, especially if we don't get a confirmation today or tomorrow. All right, Farhad says pound dollar looks like a breakout on a 4-hour chart. Can you look at that, please? Sure. Let's take a look at pound dollar. Yeah, I mean, pound dollar is right up against that resistance. It's not broken out yet. The resistance is at right about 136 right here. So not a breakout yet, but attempting to. If you look at any dollar pairs, like none of them has really broken out. Dollar yen hasn't broken the support. And trust me, what's going to happen is that if dollar does make that break, it doesn't matter what pair you look at. You'll be like, hey, Aussie dollar breaking out or pound dollar breaking out. This is breaking out. They will all look very similar. They have not broken out of that prior resistance. The only thing has broken out today was this dollar CAD right here. That's the only thing that I would say has broken out. So could I potentially take a look at dollar CAD? Well, if this stays weak, I think the next level support is about 134. Is this at a good technical setup? Like, it's not at a good technical point. I mean, the only thing you can take a look at this one and say, well, this is the prior support, now the resistance, which is at about 137. Yeah, that's the only one I would say that kind of looks the best here. Yeah, even a 4-hour chart, it's looking pretty good. So remember, whenever I'm taking a look at trending strategies, like I want things to run for the next couple of days or 3 days, 4 days, however the timeline is. 4-hour does a really good job at it. If I'm looking for intraday volatility, taking a look at what's strong, what's weak for the day, hourly actually would move really well as well. So you always have to think about how long you want to hold that trade for. If the idea of that trade is just capturing the velocity, then I think hourly does a very good job as well. If I want to hold something that was set up potentially for next 2, 3, 4 days, daily, 4-hour to daily would work really well as well. So at this point, again, I don't know if this dollar is the one that is going to move for the next 3 days or next 4 days. But it is looking pretty good over here. I mean, you look at this little rally that we had here. I mean, very anemic response here. But for this, I need to see it move, not just today, but like see how this closed today, but like how this price actually leads into overnight and tomorrow. Great questions, everyone. So happy to see the group participation here. That's why we love doing these live sessions here. And again, when markets are active, that's where we will have a lot more to take a look at and discuss. But I think we are pretty close with the dollar. We just need that confirmation. All right, so let's just wrap things up here. So dollar attempted to break out. I'm waiting for that confirmation candle. Upon confirmation, I definitely want to play that more directionally. Cryptos are consolidating, except that Ethereum. That's the one I like overall in the crypto space. But trade less. Trade with the markets in front of you. And if things are not lining up, take a step back, trade less, or even go on a demo. That's a great time to go on a demo and build out a new strategy that would be, for a different market condition. As always, if you have any questions, let me know. Otherwise, happy trading. Have a good rest of the day. We'll talk soon. Take care, everyone. Bye-bye.